Okay, these were the fibs I drew for June the 6th. As you can see, in the pre-market hours, the first fib that met the criteria for the first rule was from this high to this low. The 76.4% line was broken. So again, we draw in the opposite direction. Again, the line was broken. So I draw in the opposite direction, and once again price had broken that line before the market opened. So I drew another fib from here to here. So if you remember, one of the rules I included recently was that when price breaks twice the 76.4% line consecutively, it becomes a bit riskier, and it would be better if you just wait for price to choose where it's going to go, or to show a clear direction. Well, in this case, when the market opened, it went and retraced right to where the entry would have been at 12.95 1/4, and then moved and went above the 0% line. So if you do not get filled here, then you would not be trading the next bounce of this level, because you would consider that the move already took place. However, you could not get filled. So as you can see, price went to the 0% line and retraced. So we move to the new high, goes above 0%, retraces to the 23.6. So we move the pivot to this new high. Okay, remember, we're not going to trade this because this level the move has already taken place here. So we're not trading this. We're looking for price to bounce off this level, maybe again, and go up into here, so we can draw another fib in the same direction, or as price did here where it broke the 76.4% line. So at this moment we draw a new fib in the opposite direction from this high to this low, like this. Okay, and as you can see, price goes below the 0% line, retraces. Okay, so we move the low, then price goes through the 0% line to the negative 23.6, and then down to the negative 50% line. Okay, so at this moment we're going to start drawing an extended price fib. To do that, we're going to go to the pivot low that took place before this high, which would be here, and we're going to draw to the most recent low, which is here. Okay, we watch then as price continues to fall down, and it gets past halfway the distance between here and here, then retraces back to the 23.6% line. So we move the low again to the new low, the 0% line. And in this case, price does retrace and gives us an entry. Okay, as you can see, our entry was set at 12.93, then our stop was 7 ticks, and our profit was 6 ticks. Okay, so this is where I went short, 12.93. Price went against me for a bit, then started falling, got filled here. Okay, continued to fall, then it started rising again, and then it broke the 76.4% line. Okay, so the rules state that when an extended price fib, when the 76.4% line is broken, you're going to draw a regular fib. So we will draw from high to low. However, if we were to draw that fib, as you can see, the high was at 1298 and a quarter, the low is at 1290, so this would be more than 7 or 7.5 points. So we're not going to draw an extended price fib. Instead, we're just going to draw a fib in the opposite direction, in this case from this pivot low to the new high. Okay, price goes above the 0% line to a negative 23.6, retraces to the 0% line, so we move our fib. Okay, so as you can see here, if we were to enter at 1293.50, then our profit target would be 5 ticks. And our stop loss would be 8 ticks. So the stop is 3 ticks larger than our profit, so I would not be looking to take this trade at this level. And then as you can see, V12 Eastern Standard Time or 11 Central Time is right here, so I'd stop looking for trades. Okay, and that's how I traded today. It was just one entry where I took a 7 tick profit. Thank you for watching.